All right, here we are. Welcome to another morning briefing webinar, guys. So as always, we start with our disclaimer just to make sure that this webinar is for educational purposes only and market analysis. Hello guys, morning Theo, hope you are well. It is State Delegate called here in London. Oh yes, here in this part of Europe, in Cyprus, it's still a little bit hot. So hopefully we're gonna get there as well, because it's too hot actually here in general. So how is trading going, guys? Any particular trades you are currently in, or any pairs you would like to go through, except the ones we usually see? So just please make sure you type them on the chat box. So let's have a look. Let's have a look on the economic calendar. So today, not many things except from the retail sales for the month of August in UK. Hello for those who just join us. I hope you guys doing well. Jerry, head and shoulder forming on the Aussie JPY H4. We will have a look definitely. So retail sales 0.4%, forecast to minus 0.5%. It came out really bad for the economy of the UK, minus 1.6%. That means it can help the UK to drop the Great British Pound to drop even more lower and give some strength to the other currencies against the British Pound. Then the Michigan consumer sentiment in the US, just a small difference here. We didn't experience that much volatility coming in just from this event alone, or some major changes in the market. As always, we go through the morning briefing. Today's top headlines: China's economy activity slower, showed signs of improvement in August, rose 42%. Biden orders deepened grant for foreign investment in tech and supply chains. Russians Vladimir Putin says China's Jinping raised concerns on Ukraine situation. For Shell's priorities, follow the money. Justice Department used to block 4.3 billion home security merger. FedEx to close offices, park aircraft after warning of sales shortfall. All right, so interesting stuff also in the stocks. Let's go through the MT5 platform right now. So negative news for the pound. We see that the market it's dropping out of as well. Good opportunities, we can say, definitely good opportunities for trading. For our chart, we had this, remember, we were talking about this retracement yesterday, and we said if it's going to be a bit deeper, we would like to get involved, but the market obviously it's very weak and it didn't want to push higher. So on the 1 hour chart, it was this opportunity here, but it was at the closing, so we don't tend to take this type of trades. Now it's just selling off now, so we will see if it's going to allow us for a retracement. And that's the thing, guys, here is how can you, many people I believe, and from those who told me as well, and in many years of experience as a trader and mentor for traders, I see people, they don't understand the difference between retracement and reversal. And here is the thing: reversal most likely, and if you want to write it down, the reversal most likely it's going to happen when the price retest a major level of support or resistance, a key level, because at the key level there are many limit orders waiting to be filled and push the price to the opposite direction. So this, and where do we find the key levels, the major levels? From the weekly chart. It's the best time frame to find the key levels. Weeklies and monthlies, they show you the most important hard levels of support resistance. So here we are approaching this this support. We zoom out and we go to the lower time frames, and we see here on the 15-minute chart the price didn't reach yet at this level, so there is not that much buying pressure right now. So if we're going to experience some pullback, it means we can see some retracement, not reversal. And if the price is going to come just a little bit higher, retest this level here, it's this nice swing, lower high, lower low formation. So we can execute a trade from here and we can target this area here. But if the price before it retrace back, it touches this support, this zone here, it's tapped into this one, it can trigger a lot of these orders sitting here and waiting to be filled and execute to drive the price higher. So after the price touches and maybe penetrate a little bit a major level of support, we not going to start looking for sales on a retracement, because maybe this is going to act as reversal area. But on the other hand side, it doesn't mean that we're going to start buying, because we don't have this formation of higher highs and higher lows. So I hope now it makes sense and it's very clear for you, because I'm sure many of you have the same question. How do I identify the reversal, and how do I know if it's a retracement? Okay, so still sales for the Great British Pound against the US dollar. The euro, it holds a little bit around this area here, so maybe we can see some bullishness. However, just be mindful, we are in a strong deep downtrend. And remember, guys, when we would talk about that, I was saying that I would like to see some sort of consolidation and then a push to the downside. And why is that? Because the consolidation, it shows us who really controls the market. If it's consolidating here on a strong bearish impulse, it means that buyers, they have the opportunity to take control, but they are unable because they are not so strong. That's why it's easier to trade this type of markets. Okay, so sell opportunities still for the Euro USD. USD CHF, remember we said that we set up a limit order here, or I set up a limit order here, because I explained that this bearish, this bullish engulfing candle, is too big in length, and I didn't want to enter right here and have my stop there. I said I want to enter here when the price touches, and it tapped here, to enter there, have my stop just below here, and have a good reward to have a good room to make a decent reward to risk on this move. And why I put my limit order here, as I explained, I use the FIB tool and I find the 50% of this candle. And usually the market retraces at 50% of these long engulfing candles. All right. And we said that sometimes, like this one here, sometimes it doesn't retrace. And we have to live with that, because as traders, we have the probabilities and all this stuff. So David asked, how many pips below do you put your stop loss? Great question. If I'm trading on a daily time frame or on a 4-hour time frame, just a few pips below, it's really fine, because the spread, for example, on this pair, the major pairs, it's about 2 to 4 pips on the major pairs. But if you're going to trade New Zealand again, Euro New Zealand or Pound New Zealand, you have about 8 to 10 pips spread. So you're going to put about 8 to 10 pips below, but usually just slightly below. I'm not going to put my stop right here. If the bar's lows is here, I'm not going to put my stop there to give the market 30 and 40 pips room. No way, because what's the point? There is no point. If it's going to penetrate here, better to be out of the trade, because the direction is wrong. That's simple as that. Now, on the other hand, if we're going to trade on the intraday charts and we're going to trade on the 15-minute charts or on the 5-minute chart, our target, it's about, let's say, 15 to 20 pips. So I cannot put my stop another 5 and 10 pips below the low and then try to target these 20 pips, because then it's not favorable reward to risk. Okay, so pretty tight their stop losses on the intraday time frames, but on the daily, just 2 to 4 pips plus your spread. I think it's more than enough. Mladin, it is important to explain reversal is possible prior to support level, but is less probable. Sorry, I didn't understand exactly. We explained the reversal. It is important to, yeah, reversal is possible prior to support level, but it's less probable. Okay. Hello, Theo. Please, could you take a little on trading psychology? Call ask about trading psychology, especially when in profits. I mean, fear of losing potential running profits. Thanks. Absolutely. Kola, I have a great news for you on from now on, and guys, for everyone, from now on, twice a month, I will host webinars, Tuesdays. I think it's 6 p.m. EEST time. And I will host webinars about trading psychology, why trading psychology is important when we see support, resistance, how traders react. And also, gradually, we're going to go subject by subject and subject by subject. Of course, we're going to talk about fear of losing, the anticipation of winning as well, fear of losing, fear of not making the money in a losing trade. So you start out as a trader in the losing positions, and you are blocked to identify that at this particular moment the market shifted direction, and after the pain, it becomes so much and we cannot take it more. Then we close the trade, we say we had enough, and then we look at the market the next day and we see, oh my God, I had this change of character in the market. The higher highs, higher lows in an uptrend turn to lower highs and lower lows, and I should be out of the trade. Okay. Fear of missing out. Yeah, definitely. Guys, we're going to go through, but these trading sessions, morning trading sessions, are not offer so much of time to develop these subjects. Okay, so thanks for your understanding. And from now on, you're going to have 1-hour webinars exclusively for trading psychology. Back to the charts, Aussie US dollar. We see that we tapped into this zone of support. Anything can happen here. So our window of opportunity, it was, as we said, from here to there, actually from here to there, but with this long bearish engulfing, it just narrowed it down. And now it's just the move looks like it's over. So we're going to wait. Either we're going to close below this low, so we know that sellers are in control, or we're going to see from now on, because we already took the low of this previous candle. From now on, the only thing we can see if buyers, they step in aggressively, it's bullish engulfing, if it's going to create higher high here. Otherwise, we can wait for, we need more time to see the direction. Okay. Cherry, the webinars, they will be uploaded into the webinars page. Let me just guide you through just for a sec. So let me just change the screens for 1 minute. Here, if you go to admiralsmarket.com, you click here where it says education, and then Forex and CFD webinars. You're going to scroll down, and here you will see the upcoming one. It's going to be for October. So far, we have another webinar for September here about inflation, which I will go through gold and silver chart analysis. And after this one, you will see the trading psychology series, and you can register exactly which day they're going to put it on the on here. I assume it's going to be after the 27th, 28th of this month. Okay, but definitely we're going to be around, and I will inform you. Absolutely. So back to the chart. Let's see some pairs, few more pairs. Aussie JPY. So New Zealand, remember guys, we said this is our best trading currency pair. We have room. It's been 3 days. I'm talking about this one. A lot of opportunities arises. This bearish engulfing, this pin bar here, another bearish engulfing there. For the 15-minute chart, there were many opportunities on the lower highs and lower lows. You see this series, lower lows, boom, sell, take profit. The market make a new low here, lower low, pull back on the 50%, sell, profit, and so on and so forth. Now we break the structure, so we wait for a new lower high, lower low, as per the checklist I share with you so many times. If you need it for one more time, just let me know. USD against the Canadian dollar, we said that we approach this level of resistance. However, when we see this candle here, and we didn't see following through from sellers, but we saw this aggressiveness yesterday from buyers, there is no much of thought to start selling. You can compare the previous price behavior. Here, when we put this bearish rejection here with spin bar, we saw the market straight after selling off. Here the same, a bearish candle, the market selling off, bearish candle, the market selling off. Here we see the buyers, they stepped in. Sorry, we see first the sellers try with this doji, but then the buyers, they stepped in. So this is very bullish market. Now we start looking, especially guys on the intraday. If you are trading intraday, this is like a textbook trading. So we have this strong impulse move here, strong impulse move. What does your checklist says? We wait for a retracement. So first thing, we have our higher highs here. Is higher high, or this high, higher high, and higher lows. So we are in a trend, uptrend. So first tick. Second, we're going to wait for price to pull back to a level of support, which is this one here or this one there. Two possible levels. So we have a horizontal. Then if we draw a trend line, most likely we're going to match these areas with a trend line. So third, we have trend line support, or it can be a channel. No problem. Or it can be a moving average, whatever other factor of confluence. And then we also have fib retracement. I'm sure around this one, we're going to have something with fib here in both. This one here, guys, it's the 50%. And this one here, this level here, it's a 61. So this support 50, this 61. So perfect. we can wait either for a price action or we can set up a limit order. If we set up buy limit here, for example, if the price is going to come here and we put our stop below, because these lower time frames, as we said many times, we are talking about swing trading, and on the 15-minute chart and on the 5-minute chart, sometimes this volatility makes the candles less reliable. So a bullish engulfing here, maybe it's going to have very tight stop and the market is going to just shake before it's going to take off. So sometimes I prefer, when I trade intraday, 15 minutes, 5 minutes, 1 minute charts, I prefer to have my stop below the last swing because it's a fair distance. How many pips here? We have only 14 pips, 15 pips stop. We can make until the last swing, we can make 25 pips. So it's more than 1-to-1 for the intraday, which is fantastic. All right. Then Aussie JPY. Let's have a look. 15-minute chart. Would you make some webinars for 15? I can make you webinars for 15-minute charts. I can make you webinars for 1-minute chart as well, guys. I mean, it's if you would like lower time frame webinars, I can either focus on intraday trading on the morning briefing webinars if that's what you are trading. But for me to decide exactly if I'm going to go on the 1 hour, on the 1 day chart, I need some feedback from you. You can send us email, you can do live chat and let them know that Theo asked us to just say our preference on our trading, and they're going to send me over. Okay, I'm talking to those who are joining us through the YouTube live stream, because the guys from the Zoom webinar, they can leave feedback right after I end the webinar. So I take it instantly. But from the YouTube, it's better if you just send us an email or do a live chat. Okay. Where Dashman, no, mate, not 3-second chart. I don't trade the 3-second. I take up to 1 minute chart. How can I get a copy of the checklist, please? How can I get the checklist? Guys, I will share the link with you right now after we go through the Aussie JPY. Let's find Aussie JPY. Let's add it then. So first, we have this last point of reference. If you understand so far some chart patterns, you can see that this one here, it's a type of chart pattern sloping upwards. Now, the market came to retest these areas here. Let's say that was the strong area. We broke above, then we pull back. It's an uptrend on the daily 4-hour chart. You can find here is a nice bullish engulfing, but I didn't like the fact that it didn't make a double bottom and it just got penetrated here. On the 4-hour chart for reversals, I don't want to see lower lows. I want to see double bottoms so I can get to the upside. So it's just a little bit, it shows some kind of weakness. However, anyway, it's an uptrend. We see an uptrend here. So if that's enough confirmation for you, yes, you can start looking for buys. And gold, as we said 2 days ago, guys, from here I was screaming, this is sales, because we are in a downtrend. Textbook, very clear, lower highs, lower lows, and you just take advantage of the downtrend. Then 4-hour charts, 1-hour charts, 15-minute charts, everything was giving pullback sell. Now we broke below this. Let me just clean it a little bit. We broke below this strong area. The next very strong area of support is down here. We have, of course, we can see some reactions around this area. Okay. This area, it's the middle of a strong impulse move, and it's this point, this high point, this low point. So it can act fairly as a good area of support. So we are still selling. It's only sales and sales. This on the 4-hour chart, when we have this type of breaks, somewhere in the middle of the candle, usually the candles retrace. We can put our limit orders here. We can have our stop loss above the candle, and we can wait to be filled if the price it's gonna push that higher. So guys, let me just check if we have any pair we haven't answered. Yes, David, short pound USD. We answered that. Okay, we answered everything on the QA. Okay, that's done. So let me first share with you the link for the checklist. Guys, bear with me for a sec until I find it. So that's a checklist. Okay, here is the checklist for those who haven't take it yet. Guys, for those who are on the YouTube, I will share it with you as well. Just bear with me. Okay, so here it is. And guys, please make sure you like and subscribe this video on the YouTube channel. I will really appreciate it. Darshan, USD MXN. You want to see the USD Mexican peso, USD MXN. So US dollar, it's strong. Okay, we are on the daily chart. Now, this picture here, it's a total mess. It's a trendless environment. Darshan, you are teasing me now, mate. Anyway, Darshan, your job is to trade. No, I'm joking. For those who are trading exotics, I will encourage you to stick only to the daily chart. Don't even look the 4-hour chart. And I'm talking from experience again, because I used to trade them and the spreads are very, very big. So just stick to the daily charts. But this one here, it's screaming us to stay away because there is no clear swings of higher highs and higher lows, or the opposite. Okay, let's have a look at the DAX. Sorry, at the US dollar index. Oh, template MT5. US dollar index. You see, guys, here the US dollar, it's in an uptrend. After this bullish engulfing, it's been 3 trading sessions. The market didn't react. Maybe this is gonna just push to the upside and retest this area here, and then it's gonna push down, but still bullish on the US dollar. So it's and in my opinion, it's better we use the US dollar index as a filter to find opportunities on the USD euro, on the pound euro, and the USD related pairs. And the last one for today, the DAX. I think we have it here on the indices. Here is DAX. Okay, and DAX still short with this one here, guys. Here it's the key level of support. Then here it's some obstacle, but again, that's not a major swing. After this bearish engulfing, everything screams sales and sales and sales. Okay, this one here, it was a brilliant opportunity. You could enter there, target down here. It's more than 2.5 to 1. Okay, so we are still bearish with this one here, and I hope you understand. We go to the weekly chart, we see lower highs, lower lows, then we go to the daily chart, and we see either strong price action here or on the 4-hour chart, strong price action here, and we just execute. I share the checklist, Kyle. There is a link above here. You guys click on the link I sent you. It's clickable. Click on the link and you're gonna get the checklist. Okay, you can download it. You can do whatever you want. All right, ladies and gentlemen, we came to. How can you don't? Oh, hold on, guys. You can't see. Oh, okay. What about now? Can you see the link now? Okay, great. Okay, perfect. Apologies, guys. It was something in the settings and I just noticed it. Thank you so much for pointing it out. All right. It's close to support, but you still have room to move, Flory. All right, guys, I don't want to take more of your valuable time. It was an absolute pleasure to spend this day and this week in the morning sessions with you. I see more and more engagement, and this is fantastic. Remember, we host these webinars, we host these trading sessions exclusively for your own best interest. All right. There is no sideways pattern here. It's clearly for you to be a better trader, to be to get whatever you want to get out of your trading. Have a great weekend, everyone. Have a great day, and make sure you tune again on Monday morning and the next week again, same time. Thank you so much. Bye for now.